Welcome back, traders. After yesterday's SPY record and NASDAQ pop, on that AMD OpenAI buzz, today flipped to a pretty broad pullback.
Yeah, quite the reversal.
Small caps definitely led the fade. Bitcoin cratered from its all-time high, but gold's weekly bull flag breakout kept delivering those safe haven wins. You're listening to the Stock Market Summary Series, and as always, we're going to get into what we're seeing in the charts. But please know, none of this is buying or selling advice.
Nope, just commentary and education.
Exactly, we're just here to provide market commentary and trading education. Nothing we say here is financial advice. And lastly, if you're liking these summaries, maybe give us a quick like. It really helps us reach more traders.
It does. So even with that pressure today, are we calling this like a healthy breather in this bull run?
I think so. I mean, look at the S&P tracker, SPY. It dipped, 0.37%?
Right.
But it tested that rising support trend line, and crucially, it held that 20-day moving average. That was the floor we flagged last week, remember?
Yeah, the line in the sand level, it held. QQQ, the tech stuff, off about 0.5%. Just cooling off a bit.
Okay, index action seems contained. But the small caps? That makes me wonder a little about how healthy this breather really is.
Fair point.
IWM, the Russell 2000 tracker, took the hardest knock, down 1.07%. We talked about that pressure building last week, right after they hit fresh peaks.
We did. They definitely gave back some ground today.
And here's the kicker, though. The rotation. Consumer staples. XLP.
The classic defensive play.
Exactly. Unexpectedly led the whole market up, climbing 0.93%. Meanwhile, consumer discretionary, XLY, tumbled 1.75%. Spending jitters, maybe.
Well, that's the market signaling some uncertainty, definitely.
Yeah.
That rotation is textbook defensive behavior. But, this kind of divergence, it actually creates some excellent technical setups for traders who are watching closely.
Okay, yeah. Let's talk setups. There are a couple of patterns worth keeping an eye on.
For sure.
We're watching Open Door, ticker open. It's coiled up really tight right now.
The bull flag consolidation.
Exactly. When the market pauses like this, you want to watch names that consolidate tightly in that pattern. It signals, pausing momentum before maybe another push higher.
Right, looking for that pop. Kind of like that OSCR cup and handle we looked at last week, the follow-through potential.
Precisely, and then connecting that maybe to energy plays.
Well, look at Equinor, EQNR. It's tracing out a really nice symmetrical triangle on its daily chart.
So the highs and lows are converging, suggesting a move is coming.
A potentially strong move, yeah. But, and this is key trading wisdom here, this setup needs volume confirmation on the breakout. You've got to calibrate your risk.
Right.
Only enter when the pattern is confirmed, ideally with volume, avoiding those emotional exits, confirming with volume. These are exactly the kinds of techniques we teach really in-depth in the Grok Trade Mentorship program.
Good point. Hey, as always, guys, if you've got a stock you're watching or maybe a question about the markets, just drop it in the comments below.
Yeah, we do look at those.
We might cover it in an upcoming market summary. And by the way, if you're enjoying this breakdown and appreciate these analyses, do us a big favor. Hit that like button. It's totally free. Helps us out a ton.
Definitely helps the channel.
And click subscribe, too, so you don't miss anything. You can always unsubscribe later if you want.
Okay, so shifting gears a bit. The macro view. The data blackout, still going. Day 7 now of the federal shutdown.
Ugh. So no fresh labor reads then?
Nope. Which means the focus stays squarely on momentum, technicals, until Wednesday anyway. That's when the FOMC minutes drop.
Fed minutes. Clues on what the policymakers are thinking, especially after that ISM services number softened on Friday.
Exactly. We'll be looking for hints on their vibe, how they interpreted that data.
Okay. Now let's talk about where the real fireworks were, kinda. Bitcoin.
Oof. Yeah. Dropped, 2.17% today?
Right after piercing new all-time highs.
Yeah.
Above 125K. Crazy move.
Yeah, we're pretty much chalking that up to swift profit-taking, those hot ETF inflows. Was maybe just too much, too fast. A classic blow-off top feel, short-term anyway.
Makes sense. But contrast that with gold. GLD.
Totally bucked the trend. Up 0.5% while equity slid.
And that weekly chart pattern.
Oh yeah, that weekly is flashing a really powerful bull flag and an ascending triangle combo. That's confirming strong follow-through.
Textbook safe haven action when risk assets wobble.
It really is. Even though silver SLV took a bit of a knock today, down about 1.5%, still worth watching those patterns.
So let's wrap this up. What's the takeaway from today?
I'd say today felt like a tactical reset within the broader bull grind.
Yeah, defensive stepped up.
Bitcoin cooled its jets after that massive run-up.
And gold held the line. Reminds you there's always something working, even on a red day.
Absolutely. And, days like this really underscore why building that unbreakable market instinct is so critical for traders.
Seeing SPY probe support, but hold. Watching open test that flag resolve.
Knowing how to use volume confirmation on something like EQNR. These are the moments where good pattern recognition and sharp risk calibration make all the difference. Separates the good trades from the mistakes.
Right.
And honestly, getting that deep understanding, that confidence, that's precisely what the Grok Trade mentorship is built for. We even offer one-on-one coaching until you recoup your initial investment. We're pretty confident in it.
All right, folks, that's our wrap for today. We wish you a great rest of the day. Stay sharp out there.
Yep, manage that risk.
And we'll catch you in tomorrow's market summary, ready to dive into whatever those FOMC ripples bring. See you then.